So, Josh, if somebody today sitting somewhere in the world coming on these platforms and they are making these predictions, they are making these
Hmm.
payments using USDC and stable coins,
Yeah,
uh, is it finally legal or is there still a gray area here when it comes to prediction
right,
markets?
right. So prediction markets, whether they're on chain or not,
Mhm.
right now, um, it is it is my belief that you can trade them legally in the United States of America.
Today, if somebody is seeing an RWA coin or token being labeled as utility token, is there any particular, let's say, regulation or does it really legally make sense?
But we had 4 years of, you'll forgive my language, living hell under the
Mhm.
prior SEC chairman about crypto. But I could tell you stories about companies we represented in these investigations, and in some
Mhm.
cases trials. It was totally senseless. No one's doing a bad thing.
There are three questions, okay,
Okay.
and you can only answer them as legal, non-legal, or gray area. Okay,
Okay.
trading prediction markets on U.S. elections for profit.
Legal.
Utility tokens backed by real-world asset incentives, not ownership.
Man, I like to say legal, but I'll say gray area.
Offshore crypto products marketed to U.S. users via influencers.
Gray area.
Hello everyone, how are you? Welcome to yet another episode of Voice of Web3 powered by CoinGape Media. Hope you all are doing really well. And I understand that it's a very difficult time for crypto. We are seeing sharp declines in Bitcoin prices as well as the corresponding altcoins. And I just hope that you all are doing really well. But guys, this is the time to actually start looking at the brighter side of the things. I mean, the kind of adoption we are seeing in crypto space when it comes to ETFs, when it comes to DATs, when it comes to RWA is right now amazing. The kind of institutional interest we are seeing is at an all-time high. So I just wanted to let you know that not all is wrong, not all is going haywire. We do have some really good updates that are also coming along the line. So keep an eye on it and do read CoinGape for it. But guys, today we want to we want to invite you to something, to a topic, to discuss a topic, to debate a topic which has recently kind of caught everyone's attention, and it is prediction markets. Prediction markets are now seen as one of the most rising industry vertical alongside your decentralized exchanges, alongside stable coins. So today we have somebody who has worked into very depth. He has dealt with topics ranging from legal to finance. So today we wanted to invite somebody who will give us an idea on the side which we otherwise as retail investors never have, and it is the legalities around it. How the companies, how these institutions are actually managing legalities, and how as retail investors we should be paying attention to it. We should be very careful what we are trading and how we are trading and where we are trading. The FTX collapse was not long back. We need to keep these things in mind while we actually trade and while we actually kind of deal with these new asset classes. So guys, today we have somebody really important from the crypto legal side. His name is Josh Sterling. He is a leading US regulator, and he's a leading US regulator and financial markets attorney at the center of the legal battle. And you must have seen these updates recently about Kalshi going heads on with CFTC and other US regulators. He's the guy who is at the center point of it. So guys, he's a US regulatory and financial markets attorney at the center of the legal battle, shaping the future of prediction markets, crypto market structure, and event based trading. As part of Kalshi's legal team, he has been directly involved in the landmark Kalshi versus CFTC case. We will discuss more about it, which challenges how US regulators classify prediction markets, electronic election contracts, and real world event trading. Josh regularly advises on complex issues at the intersection of securities law, commodities regulation, crypto assets, and tokenization, and is widely followed for his analysis on high stake cases like the XRP lawsuit, US crypto legislation, and also the legal limits of decentralized markets. His work sits at the crossroads of Wall Street, Washington, and Web3. So he's the right guy to guide us that what we are doing in crypto is actually legal or not legal or even a gray area. Josh, welcome to Voice of Web3. How are you?
Well, thank you for that kind introduction. I was looking behind me to see who you were talking about. Um, you're very nice. It's a pleasure to be here. Thank you.
So, Josh, I mean, first of all, congratulations. I mean,
Yeah.
the whole prediction market right now evolves around you challenging CFTC. I mean, we as retail investors are looking at it with very eagerly that what is going on there, how prediction markets, and but we all know, I mean, prediction markets have kind of created such an abundant market right now for everyone. The retail people who used to work in who used to trade in crypto are now moving to prediction market platforms. So, Josh, first of all, I mean, I just want to begin with that. How you came into this Kalshi case and what went on there between you and CFTC?
Yeah, sure. So thank you for that. I'll start by saying that any views I express here today are mine. They don't represent the views of any client that I may have. Um, and yeah, so in private practice, we've had a role here at the Milbank firm, and at my prior firm for some of our earlier litigation, making the case that event contracts, the kinds that people seem interested in trading a good bit, are in fact legal in the sense that if they're operated on a market that has a
Mhm.
license with the CFTC as a designated contract market or DCM, I'll start calling it DCM so don't run out of breath.
Mhm.
You are allowed to trade them, and it's a question of in the United States federal law, not the laws of each of the 50 states that make up the United States plus the District of
Mhm.
Columbia. So, the first challenge was when
Mhm.
some prediction markets wanted to list contracts on who would win the 2024 elections. The first contracts were on who's going to control the United States Senate, who's going to control the U.S. House of Representatives come January 2025. And at the time, the agency, the CFTC, that regulates these markets, these DCMs, try to keep it to two acronyms, um,
Mhm.
took the view in the prior administration under President Biden that you can't offer contracts on election outcomes, who's going to win. And they said, like, look, that's probably gaming. That's probably something that's illegal under state law, so you can't do it. Because there's a rule, we call it the special rule in the statute that basically says, look, if you have a contract that involves like war, terrorism, assassination, gaming, or stuff illegal under state law, the CFTC can basically decide you're not allowed to list it.
Mhm.
Okay. I don't understand and never understood. This will go right quick. I never understood an election to be a form of gaming. It's really
Mhm.
not. And I never understood an election to be illegal under state law. There were other points we made, including more skilled lawyers than I on our
Mhm.
team, but that basically prevailed, and we won in federal court in Washington D.C. Um,
Mhm.
the CFTC appealed to the appeals court here in Washington D.C. and they tried to
Mhm.
get it stayed. Like, oh dear heavens, don't list these contracts before the 2024 election. Chaos
Mhm.
will descend on the earth, and we succeeded in it not being stayed. And in fairness, it's hard to get a stay on appeal in
Mhm.
in many cases. Um, I think especially when you're the government. That's just me talking generally. And so we succeeded there, and then
Mhm.
ultimately the case was dropped. But by that time, markets had issued, and people had traded and enjoyed trading and benefited from trading these election contracts. And I believe that trading on election contracts was more accurate than most polls, if not all polls, on who's going to win the election. So these are truth engines, these markets, as most markets are, that tell you the price of a stock, how much is a company worth. It's sort
Mhm.
of the net present value of the future earnings of a company. Um, and derivatives contracts can tell you the price of oil or wheat or power. They can also tell you, uh, you know, whether something's going to happen or what the outcome of an event is. And then from there, it's gone on into sports, sports contracts, along with other contracts in other areas.
I mean, yeah, it's a very big market now. I mean,
Yeah.
I'm seeing top publications, top most newsmakers actually using and citing these predictions and charts that okay, these are the odds of somebody winning or somebody losing.
Yeah.
So, Josh, if somebody today sitting somewhere in the world is actually, let's say, kind of coming on these platforms and they are making these predictions, they are making these
Hmm.
payments using USDC and stable coins.
Yeah.
Uh, is it finally legal, or is there still a gray area here when it comes to prediction
Right.
markets?
Right. So prediction markets, whether they're on chain or not,
Mhm,
right now, um, it is it is my belief that you can trade them legally in the United States of America.
okay.
Because my belief is that these contracts and the trading of them is regulated by federal law, and the federal
Mhm,
law is pretty clear. If they're listed on one of these DCMs, you can trade it. So I don't think, and I would also say that an individual trading an instrument on a
mhm,
market that's allowed to operate, I don't think that poses really any serious risk to individuals or companies trading on these markets. For example, if you were
mhm,
trading event contracts on an event market that had a DCM license, and all of a sudden, some states or some law got passed by Congress and said you can't do that anymore.
mhm,
Um, that's a challenge for the DCM. The individuals trading on the DCM or the companies trading on it, they haven't broken any law. It's just what they were doing before has been determined to be something they can no longer do. So, like the downside for someone trading positions on these markets, if they were determined in the future to be unlawful, was just they can't trade there anymore. My personal sense is that we have a very good set of arguments that they will be and will remain lawful. So in an alternate universe, if you will, I don't think that the people trading on them would be breaking any, the relevant law here by trading on them. It's really an issue for the people that operate the exchanges or the brokers they're in partnership with.
mhm. I mean, so these platforms have made it really easy to go there and start predicting on these outcomes. I mean, you can just connect a MetaMask wallet, and right away you can start, kind of go there and start predicting actually. And they are quite, I would say, I mean, they're quite very fast as well. I mean, as if you compare the speed at which these transactions are taking place, and I even saw some of the events actually going as high as 25 million to 30 million worth of a pool when it comes to
Yeah.
predicting and creating these. So it is getting a lot of attention, I guess, from everywhere. Now, Josh, I
Hmm.
wanted to understand. Now, I wanted to go to the other side of the table. I mean, when we talk about companies in crypto today who have large users and who now want to, let's say, become a part of this market, who want to release new prediction market products,
Yes.
what sort of process they have to follow today? I mean, do they need a license to operate in US to do these activities? What shall be their approach to this, and what do
Yeah.
they need?
Yeah, absolutely. So, my view is that if you want to offer event contracts on a prediction market in the United States, you need a federal license to do it. You need to become a DCM. Um,
Mhm,
I will say I'm aware of, a number of platforms that don't have their license, that nonetheless people in the United States can access and trade there.
mhm,
I think that is probably not lawful. But again, I think that's a risk for that any platform like that would choose to operate in that manner. Particularly if they say, oh, if you're in America and you want to trade over here, just turn on a VPN or some other
mhm,
blocker and it's fine. Like that's actually probably not lawful, I would say. And I'll leave it
mhm,
at that. But if you're coming along and you say, look, I want to have a prediction market of my own, I want to list event contracts, you would need to become a DCM.
mhm,
That's one option. And there's a second option I'll get to. So to go over this DCM process, you need to fill out an application with the U.S. federal government, with the CFTC. It's a very extensive application. It's available online.
Mm-hmm.
And you might wind up submitting, over 1,000 pages of paper,
Wow.
explaining how you're going to operate, what your rules are, how you're going to comply with
Mm-hmm.
the law, who's on your board of directors, who's your regulatory officer, all manner of things. After you file that application, the government looks at it and says, okay, we have a bunch of questions. Or we have a few, or we have none. When
Mm-hmm.
they no longer have any questions, they say, okay, your application is considered materially complete, putting that in air quotes, because that's a term they use. And at that point, what the law says is within 6 months, the CFTC itself has to decide whether to approve you or not. Now,
Okay.
historically, they've taken much longer than 6 months for many reasons. But at that
Mm-hmm.
point, you've got the clock running. And the important thing is you have to demonstrate how the technology works to the CFTC. You have to do like a live demo. Like this is literally how it's going to work
Mm-hmm.
before they will, really register you. So you have to be prepared from a technology build out perspective as well.
Mm-hmm.
I'm going to leave to the side all the sorts of commercial agreements you need to enter into. You need to partner with a clearinghouse that once the trades meet on the piece of software that your exchange or matching engine, the money goes
Mm-hmm.
someplace else and is held to make sure that people get paid when the contract's over or they exit the contract. So you need those kinds of relationships. There's a lot more in that we get into with a lot of young startups we work up with,
Mm-hmm.
and others who are licensing new markets. So that's one way, like create your own market. Now you might say,
Mm-hmm.
holy cow, that sounds like a lot.
Right, right. That's what I'm
But
thinking.
yeah, holy cow. And then I've got to listen to this long-haired idiot if I hire him go on and on and on like he is on this podcast. I'm sympathetic to not wanting to listen to me. Um, Another way you can do it, like for example, if you have a large numbers of customers in some other vertical, some other business, and you're like, look,
Mm-hmm.
wouldn't it be great if I had a second app or second tab on a website? You could go over and it would be predictions. Um, well, you can do that. You can become a broker that
Mm-hmm.
connects your customers to another market. So, and it could be any prediction market that's out there, or maybe all of them, or some of them. That's just negotiating with those exchanges. So you become a broker. Now, becoming a broker is a little bit easier. There's two kind of brokers in America. I won't bog you down on this, but one is the kind of broker that handles customer money, um, and assists with putting the trade in. So you handle the orders and you handle the money. The second kind is, well, you kind of basically take your trade, you take the orders your customers want to enter into, you never touch the money, you kind of introduce them to other people to handle the money.
Mm-hmm.
Um, a lot of people I talk to seem to favor the model where you get to handle the customer's money because you're introducing one less person you have to share a customer relationship with. You want to capture your customers, and again, that's a commercial point. But you
Mm-hmm.
get this license as a broker, and to do that, I'm sorry, this is my third acronym. You're going to
Mm-hmm.
have to go through a registration process with a group called the National Futures Association, or NFA.
Mm-hmm.
Basically, they exist to handle all the registration of brokers and other intermediaries because there's so many of them. So the CFTC doesn't have to. It helps the government save a little bit of money. And I think
Mm-hmm.
we're about 40 trillion in debt with no budget passed. So it's good to save money here in the United States if
Mm-hmm.
you're the government. Um, so you deal with those folks and answer their questions, and you get registered. And we've seen brokers get registered, inside of 6 months or less. I will say we had uh, we had one broker that had some
Mm-hmm.
trouble getting a license under
Mm-hmm.
another chairman, not the current chairman of the CFTC.
Mm-hmm.
They stopped the registration process for no good reason, so we had to sue the CFTC to ensure that that broker could get its license. Um, I think that, let's say cooler heads prevailed, the agency got new leadership, and that broker got its license. And so that's all to say, I sure am very hopeful that no one has to sue the CFTC again for the simple act of getting a brokerage license. There's actually a constitutional right that you should get those licenses if you apply in good faith and meet the requirements. So I've gone on and on and on, but basically you could make your own exchange or you could become a broker. Each
Mm-hmm.
is kind of costing a lot of money to do, but having your own market is really expensive. And I think commercially there, you're competing against, some growing major incumbents out there. There's a couple, three of
Mhm.
them that are pretty big, and like you'd have to be differentiated or find a way to compete with them where you can be confident that you're going to be able to
Mhm.
grow a successful business. So it's a tough environment.
No, I mean, before we got into what we got a confirmation from your side for the podcast, we actually asked few of our own clients that, is there any question for Josh you have? And this was actually the question that, see, we have a lot of users on a platform. It may be a media
Yeah.
company, it may be even an exchange, current crypto exchanges, because the retail market is quite down right now. I mean, retail investors
Mhm.
have lost a bit of faith after the 10th of
Oh
October
yeah.
event. And I think right now the major question they are facing is what should be the next product we should offer to our existing users.
Oh
And
yeah.
prediction market, given the current, I mean, the current buzz around it, they definitely are looking at it as a very big next product
Sure.
to look at. So yeah, I mean, I hope this answers their question that they can become a broker and not try to become a marketplace themselves in the first.
Yes.
They can
Yeah.
do
There are
the great.
many. Yeah, there are many well-known companies in
Mhm.
other lines of business that have gone on to get brokerage licenses. Um, I'll name a few. Fanatics certainly has, Underdog, Prize Picks, Sleeper,
Mhm.
many others. Um, and they've decided to become brokers, and they have become brokers, and then they plug in all their customers to another exchange. And so that's
Mhm.
certainly one way to do it. And I will say, I did mention that becoming a broker is expensive, but it's much less expensive than becoming your own market. And I believe it would probably be much less expensive as well to operate a broker
Mhm.
compared to a market. And so, if you're in the world, if you're in the States or somewhere else, and you just want
Mhm.
to get customers onto an exchange here in America, where the largest prediction markets seem to be, I think. I know
Mhm.
one has a large, a non-US operation. Then you would become a broker, and then your customers in other countries can come onto it.
Mhm.
One thing I would say is, if they're operating in another country, and they want to get a U.S. license, they can do that. It's fine to do that and get non-U.S. customers on that platform. The question then will be in your home country is can you offer that kind of product, under the
Mhm.
law of various countries? And well, we've looked a little bit at that, but I only practice American law. So,
Mhm.
it's just something that really needs to be looked at to make sure that if you're opening up a new opportunity to your customers, that you yourself
Mhm.
are not having exposure against a regulator and, with the home country in which you find yourself.
Mhm. I mean,
Yeah.
historically, we have already seen that there is a quite categorization when we see whenever any token or any product in crypto is launched, it is very well labeled as whether it is for US investors or not for US
Ah,
investors. It is very, very
yep.
well labeled that you can see. So most of the exchanges today I see they don't offer the same services they're offering globally to US investors actually or US
Yeah.
citizens.
Yeah,
And I
that's
guess this,
helpful to know. Yep.
yeah, I mean, and this is the same debate, just like any other crypto product is there, that if any company which is regulated in, let's say, Hong Kong and it is trying to launch their product in
Mhm.
US, but I guess still they need that license. They need to have that kind of, federal license or maybe the brokerage license, as you just
That's correct.
recommended. Yeah.
That's correct. And one question I've been asked is, okay, well, right now in the United States, there is this debate going on in various court cases involving a number of companies. Is this event contract? Is it licensed and regulated by the CFTC? At the federal level, or is it actually some type of gambling or gaming that should be
Mhm.
regulated by individual states? Nevada,
Right.
Maryland, other such states, New York. Um, and it'll be a question then as you sort of divide the world up between U.S. and non-U.S.
Mhm.
Um, you have to look at the U.S. part of it and probably explain to your local regulator, for example, well, what is this in the United States? And as I sit here today, personally, I feel pretty comfortable saying, yeah, this is a derivative. It's regulated by the CFTC. Do you have a
Mhm.
license in your home country to offer derivatives from a U.S. market
Mhm.
onshore to your customers there? Um, I think that's probably a question about can you offer derivatives to customers in that other country? It may be in that country you have to say like, well, what if it's gambling? You know, I don't
Mhm.
know. So that's kind of how I think about it. I really do think it's a derivative, and that's how it should be regulated. I hope the
Mhm.
courts agree with us, and I hope other international regulators come to appreciate that as well. But it's always tough to get a bunch of people to yes.
I mean, most of the countries are not that fast as US, especially after Mr. Trump became the president, right? And of course, we
Hmm.
are seeing now quite favorable leadership coming into picture at CFTC level, at
Oh yeah,
SEC level as well. I mean, so definitely the US is moving really fast now as compared to the globally everywhere. And
right.
countries, I mean, which are very slow in terms of regulations, we are already seeing. I mean, investors are actually losing there a lot because some of these
Mm.
exchanges, just like FTX, the Luna crash, even
Yeah.
we see a lot of exchanges in India recently. WazirX, it was called WazirX, I guess. And
Yep.
these, we are seeing these exchanges getting hacked or maybe getting manipulated in some way or the other way, and the retail investor has to be at that cost, right? So I guess
Right.
everybody now is understanding the importance of this regulation, and the role
Yep.
of people like you is actually becoming quite extensive, I would say. Finally, the lawyers have to come in the middle and tell you, hey guys, this is not
Sure.
legal and this is legal.
It's true. I agree, and you certainly want you want to make sure that wherever your money is being deposited, that it's safe. You
Right,
know,
right.
and I feel having worked at the CFTC before in my life, I have a high degree of confidence that those assets are pretty well protected by the laws if those laws are followed. And you're
Mhm,
totally right as well. The U.S. is moving quickly. Our Congress is kind of moving on this Clarity Act for crypto, but I think the regulators have excellent leadership. I've known Paul Atkins, the SEC, for a long
mhm,
time, as have many.
mhm,
And I think he's just terrific. I remember 20 years ago he was there, and people thought he
mhm,
was this younger radical, guy. And yet 20 years later, I think he still kind of has the same views. It's just everyone realizes
mhm,
how much good sense they make, so that's
mhm,
good.
mhm,
Um, and then, we have Chairman Selig over at the CFTC, who I know a little bit. I think he's excellent. I think he works quite well with the SEC chairman, and I'm very supportive of and optimistic he's going to be just a terrific leader for the
mhm,
CFTC. So in both cases, I think the president here in the states made a really fine pick, and I haven't even mentioned our Treasury Secretary, who I think quite highly of. Had the
mhm.
pleasure of speaking with him before, and I think we've got some good financial leadership here in America.
Yeah, I mean, we are seeing, so we are based out of UAE, and I
Yep.
think before Mr. Trump came to presidency, we were seeing a lot of companies from US migrating to Middle East and looking at other
Oh yeah.
offshore locations where they can go. And now we are seeing the reverse pattern. Now we are seeing they all want to go to US. They want to
Yeah.
get licensed as soon as possible and actually
Right.
finally provide some form of regulations for their investors, to trust upon and bet upon.
That's right. Yeah. No,
The
I think anytime that anytime that the United States can be a leader in setting the tone for international regulations, it's helpful. And given the way we
Mhm.
conduct our monetary policy in the United States, where everybody buys our treasuries and uses them as collateral everywhere
Mhm.
for everything, um, uh, still in most cases, it certainly makes it a bit easier of a sell to do that. But I think our rules need to make good sense.
Mhm.
Um, I think the legislation that's out there makes some good sense, and if it's a model for the rest of the world, that's great. Personally, when I was in government, I had to write a rule
Mhm.
that sort of tried to link the U.S. and the non-U.S. derivatives markets. Um, I thought it was a pretty good rule,
Mhm.
but it's still a hard thing to do because everybody's home country rules are hard, and then you've got to compare them. Like, oh, can we
Mhm.
rely on the rules of England and Wales and for someone to have
Mhm.
business in the United States without a license here? It's very complicated. So to make them as close as possible, like, is quite good. So if we can set an example, great. But I'm mindful that major jurisdictions like the European Union are well ahead of having
Mhm.
rules around digital assets. For example, And so that's going to cause some friction. But the U.S. needs to have rules for all of it to start, as you say, so that companies, people that want to access this market, be in the dollar flow of funds, can do it. We would encourage that. And I should say dollar and stable coin now. So,
Yeah, yeah. I mean, Josh, second topic we have today, and we have to discuss it, is, of course, tokenization. Legally,
uh,
I mean, so much of chaos is there, and we are seeing different types of tokens, different types of coin popping up. The culture seems to be the same as it was during the time of ICOs. It seems to be the time of NFTs again when it comes to tokenization. We are seeing
yeah.
so many tokens getting listed on exchanges such as Binance, even some on Coinbase. While
Mhm.
we see, when we go into the documents, we see that, okay, this is actually something which is backed by RWA. This is not RWA on chain. This is something backed by RWA. So we do see that debate happening again, that which of these coins are actually utility tokens, which of these are actually, again, securities, digital securities, we can call it. So Josh,
Right.
I just kind of wanted to hear your opinion about it. That today, if somebody is seeing an RWA coin or token being labeled as utility token, is there any particular, let's say, regulation, or does it really legally make sense? An utility token that is backed by RWA, I mean, versus something that actually represents ownership.
Yeah. I'm sorry. I think you said you used an acronym RW. I didn't. What does that mean?
Real world assets. So it's again
Oh, real world
tokenization
assets,
movement.
RWA. I'm sorry. My audio was cutting out. I apologize. RWA.
I
Yeah.
mean,
So I
when we
think there's,
when we see these utility tokens in
yes.
RWA space versus
Yeah.
security tokens that actually have some form of, let's say, legal binding
Oh, yeah.
behind it.
Right. Yeah. So, um, I wish this question wasn't as hard, still, but we had 4 years of, you'll forgive my language, living hell under the
Mm-hmm.
prior SEC chairman about crypto, and I could tell you stories about companies we represented in these investigations, and in some
Mm-hmm.
cases trials. It was totally senseless. No one's doing a bad thing. Okay,
Mm-hmm.
no one was doing. I mean, some were doing bad things like FTX, but most people weren't doing bad things, right? Just trying to innovate.
Mm-hmm.
I think that there is space now for there to be tokenized real world assets that are not security tokens. And the easiest case is like saying we're going to have a smart contract around a mortgage, or we're going to
Mm-hmm.
have a smart contract around tracking shipping containers. Global freight, it's major business. I think that if that just becomes a mechanism of recording the movement or ownership of a physical asset, I'm not personally, speaking generically, too concerned
Mm-hmm.
about the United States saying, "Oh, that's a security token." You know, I think if you're offering a token like in an ICO style situation, like you're trying to raise funds in
Mm-hmm.
like a new protocol or a new company or a new offering of services on some layer of the Ethereum blockchain, and you're going to put the funds raised by the issuance of tokens to work. I mean, basically, you're doing a securities offering. I mean, I think that's
Mm-hmm.
really where it is until Congress says otherwise. And so you're going to have to
Mm-hmm.
follow some version of the securities laws. You know, um, so I think that particularly given the Ripple case and how that's shaken out, I think parties agreed to walk away from it last August. It's not perfect, but it's definitely workable.
Mm-hmm.
I remember at the time when the judge there issued her decision. I had a colleague at the time who was a very experienced senior lawyer who said, "Oh, this will be thrown out in a heartbeat," you know.
Mm-hmm.
And I said, "I don't know. I mean, I think it's a pretty challenging issue to address. She didn't really have much to work with, this judge, and I think she did a good job of trying to say, like, look, as far as I can see it, you know, um, sort of this broad general offering of what could be a useful utility token doesn't seem to be a securities offering, but if you and I are talking, it's an institutional sale, and we know each other, and we're making promises, and you're going to use this money in a particular way, that might be a securities offering." It seems like that was the case here, and that's what the parties settled out on. And so I thought that the opinion faced a challenging set of issues, but I think people have been working with it, even though it's not as clear as a law in the books, a statute. And so I
Mm-hmm.
just think that it shows the willingness of the industry to be very, very practical. And like in
Mm-hmm.
my experience as a regulator, if you give someone a rule and it's sensible, not
Mm-hmm.
perfect, they're going to follow it. And then once they start following it, all these
Mm-hmm.
questions come up. And then, in our system, a common law system, there's questions about it. The courts can help decide it. And then over
Mm-hmm.
time, you have a real body of law that people can base private agreements, contracts on. And that's how you make an economy go.
Mm-hmm.
Really, that plus the respect for the rule of law. And so I think we just need that, whether it's, somehow based on Ripple or something else. If you just set the table stakes, people will come, they will meet, they will make
Mm-hmm.
deals, they'll have disputes, but you have a real body of law that supports growth. And that's what every country should want. And I think that's what my country wants. And so I think it's good.
So, Josh, actually, before coming to talk with you, we did some research around tokenization, and we were trying to see that, okay, people are launching these tokens, and how are they doing it? I mean, how are they asking investors to pay up for these tokens, actual money, when they're listed on Binance or somewhere? And then we saw
Yeah.
some licenses popping up. They call them VASP licenses, I guess.
Oh,
And
yeah.
saw that there is no VASP license as such in US or any big jurisdiction in the world, but these
Right.
offshore countries like UAE or Poland or SVG, for that instance, they are
Hmm.
actually launch kind of giving these licenses as VASP,
Yeah.
and people are utilizing those licenses to become token issuers. They are using those licenses to become custodians.
Yes.
And when I, as an investor, I am buying a now token issued by such an entity, let's say, do you think this is justified and legal, or am I getting into some kind of trouble in the future?
Yeah. And so I think for someone who's looking to invest,
Mm-hmm.
I think there would need to be, an institutional investment or, a real investment for someone who's privately wealthy. I
Mm-hmm.
think you need to do some really close due diligence around that. I'm
Mm-hmm.
familiar with VASP licenses. I'm no expert in them. I think that
Mm-hmm.
they work for their intended purpose in the jurisdictions where they give you legal protection to do so. And so the
Mm-hmm.
question will be, to what extent is the company going to do a good job of not going
Mm-hmm.
any farther than its VASP license? Um, I think that's really like important legal diligence point, and then sort of understanding what they're going to do. And then, if you're making an investment and you're sort of structuring a legal agreement around it, like I'll invest
Mm-hmm.
and remain invested if these five things are true. But if they're
Mm-hmm.
not, like I get my money back or I can sue you, right? Um, you want to make sure you're covered there too. So like you can do a little diligence in the front end, like, is this a problem now? And if not, you
Mm-hmm.
can say, what if it's a problem later? Then you just have a good investment
Mm-hmm.
agreement on that, hopefully, that would give you some protection. Not perfect, but better than nothing, as we say. And so I think you want to be careful about that. I think if someone said, oh, we have a VASP and we can operate in every country and do whatever we want. I mean, that's obviously, I'm no investor. Professionally, I might pass on someone like that, because it's just not serious. And you and others like you will know that now. You're like, okay, well, let's find about these VASPs. Let's find a reputable law firm in the country where they operate or someone who's knowledgeable and really try to understand that. I think it's quite important.
I mean, there's such a FOMO right now that we see that everybody is trying to bring everything on chain, all these assets popping out, somebody trying to, let's say, make a music label and album to trying to tokenize it and
Oh,
raising
yeah.
funds. Somebody, in some part of the world trying to tokenize their real estate or an apartment, and then again going out and raising funds. And in some
Yeah.
instances, we have seen these tokens actually getting listed on a big platform like Binance as well. And when something lists on Binance, as an investor, you are kind of you are sure that, okay, I can now buy this, or I can at least speculate on this particular token now. And this is
Yeah.
where I'm seeing a lot of funds in US, particularly, if you see. So what I saw was that I saw a few private equity funds. What they did was that they tokenized some of their funds, and they utilized it actually to raise more capital for investing. And when I looked into it, I saw that these were actually offshore funds. They were not actually in the US.
Hmm.
Now you are an offshore fund, you are calling yourself a US fund, and you are tokenizing a part of, let's say, your fund, and you are using it to raise further capital from across the globe.
Yeah.
And this is kind of a flavor we are seeing more happening in tokenization as compared to something happening like securitize or maybe some other regulated
Oh yeah.
platforms trying to do it. So that's where actually I wanted you to help investors again, not falling like into scams like FTX or something like that, because these are
Oh yeah.
very complicated systems. It's very hard for somebody who
Yeah.
just started trading 2 years back to understand what is actually happening at this scale. So today,
Oh,
if I see
absolutely.
some private equity fund in US that is saying that, okay, we are going to tokenize our fund, we are going to allow you to buy these tokens, which will tomorrow allow you an access to, let's say, the kind of appreciation or the kind of ROI we have. What should I be actually looking at, when I go into something, some kind of product in tokenization like that?
Yeah. So if you're talking about like a tokenized investment fund,
Uh-huh.
just
I
offering
guess
you an
Robinhood is
opportunity.
doing the same way. Robinhood and others are also allowing you to trade basically these securities. First, they create a fund, and then they kind of allow you to buy and sell, I guess.
Yeah. Yeah. And so I can't and won't speak for Robinhood, but I kind of understand what you're talking
I
about.
understand that. Yeah,
Yeah, no, I mean I got a lot of friends there, but
I
I don't want to
I I don't
I don't
want
want to talk.
you to.
Yeah.
I don't
I
want you
know,
to.
I Yeah,
Yeah,
no,
go ahead.
I know. I know. Sometimes being a private practice lawyer, you have to be even more careful about what you say than in government, which is kind of funny,
You
but
should. You
true.
should. Yeah.
Uh,
Yeah. Mhm.
Um, so yeah, I think, look, if you were to access a platform, a reputable platform, um, a platform that has, and I'll use my biases here, right? A
Mhm.
platform that has like a U.S. license as a stock exchange or a U.S.
Mhm.
broker-dealer license, someone you've read about, might even be a public company,
Mhm.
has shares trading on the New York Stock Exchange or NASDAQ or
Mhm.
something. Um, and you have an opportunity to buy a tokenized security, right?
Mhm.
Share of a fund, but it's tokenized. It's got a smart contract around it. I mean, I would
Mhm.
say I would feel, as an investor, if it were me and my money, I'd feel better about that um, than I would, doing it by like word of mouth, or in
Mhm.
some sort of like non-centralized format. Now, I'm sure that all those platforms that offer those opportunities, don't in any legal sense stand behind them. Like, look, if
Mhm.
I was trading a stock, I'm gonna give you a great example and to show you how old I
Mhm.
am.
Mhm.
If I was buying and selling shares of Enron, the wonderful
Mhm.
U.S. Energy company that was a total fraud, um,
Mhm.
and went to zero, real bad, 25 years ago. Um,
Mhm.
like that is really bad. Okay, it went to zero, and I want to sue because I was lied to. Well, you
Mhm.
can sue that company. Maybe you can sue the accounting firms that gave it clean audit opinions, as they did, put Arthur Anderson
Mhm.
out of business. Um,
Mhm.
yeah, I don't know. Are you going to sue the New York Stock Exchange? I honestly don't know if like wherever Enron was listed and if that exchange got sued for any reason, if they were successful. But it just seems odd to me that you would have
Mhm.
recovery against stock exchange and said, look, they met our listing standards. We listed it. I don't know. So I would say that it's a good sign that, uh, a tokenized security is on a regulated exchange, but it's not the total story. It never is. I mean, there's all sorts of companies that have real problems that have publicly
Mhm.
traded shares. This happens all the time. And so I would view it as like any other opportunity. Similarly, I would say if I was given an opportunity to purchase a tokenized security, it was on some platform I'd never heard of,
Mhm.
anywhere. And it's making all sorts of ridiculous promises. Like that's what's going to open up a new age of investment opportunities and something crazy like chicken farms in Kentucky. Like come
Right.
on. Like I'm giving a silly example, but like you got to
Mhm.
have a bit of a common sense or gut check. Like does this feel right? Kind of sense of things, I would say. And then, but I do think where you can, particularly as a professional investor or someone with real wealth, really try to understand what's going on. Really try to understand what you're getting into. I think that's just good. That's every investor should have that opportunity. Most rely on the securities laws to help them out because they're like me. You got to know
Mhm.
what the company says. So you should study that. But if you're like an investor has an opportunity to understand it deeper through your own research, you should research it. Just don't say, okay, it's listed on an exchange, it's fine. You know.
Mhm. I mean, crypto investors, I guess they got the they did get the taste on what can go worse actually. On 10th of October, we all saw that, and
Yeah.
right now we are just hearing in news that who is to blame, what is to blame, and I don't think that legally there is any way to actually make allegations on anyone. I mean, we
I
have
see.
signed so I particularly received this one question. I have two questions for you actually. One I received, so somebody is saying that I lost so much of money on Binance, and it
Mm,
was at that instant that actually Binance stopped working, so the platform may have stopped working because of the high volume or something. Is there
mm.
any legal standpoint for me to make here, or I should just accept the fate?
Sure. Well, I can't give legal advice over the phone, so to speak. And in fact, my firm represents the company you mentioned. So I can't talk about that. But what I would say is that if you lost your money because of some
Mhm.
operational issue at an exchange or a clearinghouse or a broker, um, there's probably a way to try to get some recovery of that money. Um,
Okay.
even outside of a bankruptcy.
Mhm.
In the United States, there are all manners of protections for people who invest in securities and
Mhm.
commodities in the event that their broker goes insolvent. Um, but if it was simply an operational error,
Mhm.
um, then probably by the terms of service you've entered into or that are
Mhm.
offered by the exchange or the clearinghouse or the broker, you might have
Mhm.
some means of getting your money back. It should not be, I don't think, in general, that like,
Mhm.
look, stuff happens and we lost your money. I don't think that's how most responsible companies operate.
Mhm.
You have to make some effort to get the money back. And so I'm not familiar with the precise circumstances of this person or anyone else, but if it purely was an
Mhm.
operational issue, there
Mhm.
should be some way to explore getting back at least some of your money, it seems to me.
Yeah. And Josh, of course, I mean, crypto market structure bill, Clarity Act, that is what right now everybody is waiting for it. And the next question was that what is Josh prediction about it?
Ah,
Does Josh actually see this getting through or getting passed, or
huh?
you see that it's
Right.
it's not going to get passed?
Yeah. What's funny is I've lived in DC for 25 years now as a practicing lawyer, and I don't spend a lot of time on Capitol Hill because I work for a living. But
Uh-huh.
uh, the legislation's been around. There's a huge push by the crypto industry to get it passed. It's out of the committee that reviews these things,
Mhm.
so it's got to get voted on. It's hard to get time to vote on things. And if I were a cynic, I would say, well, maybe Congress isn't going to vote it through because there's a lot of people up for election this year,
Yep.
and it would be great to raise money on continuing to fight the fight.
Mhm.
That happens on a lot of issues in Congress. Oh, we're going to deal with that. But to fight for you, we need to raise some money.
Mhm.
That happens in every issue, and a lot of crypto companies are smart enough to recognize that, so it gets hard.
Mhm.
Um, I would say, particularly since the White House, I believe, really wants a solution here.
Mhm.
I would say this isn't going to make anybody satisfied. There's probably a more than 50% chance it'll get passed this year. I sure hope so. But
Mhm.
I will tell you, I think the regulators are saying themselves, well, what can we do to promote this industry if Congress doesn't pass the law?
Mhm.
So I would say probably a greater than 50% chance it gets passed. The fact that it's out of committee is a really good sign. So hopefully it gets a vote.
So your, so I guess your expectation is net we are getting a crypto market structure bill in 2026. But I guess
Yeah,
I
I'd say
think we have
greater.
election, midterm election in 2000, November 2026 as well.
Yeah. Yeah, I mean, I think there's some real pressure if as expected. Some
Mhm.
expect, that the Democrats will come back into power. I just don't know that any legislation that the White House would want is going to get passed for the next 2 years. Um,
Mhm.
I think it's just going to be a fight for 2 years over a budget. and getting a budget passed. And maybe you throw in some crypto legislation into a big budget bill. You know, we had one big beautiful bill. I guess maybe we get a second big less beautiful bill or something. They put it in there, but I sure do hope that Congress sees the light and passes the bill this year. So I'd say over 50% chance.
So, Josh, thanks a lot. I mean, we have taken a lot of time today, but these are
Yeah,
kind of questions that everybody right now is asking, whether they are on the business side, whether they are
sure.
on the industry side. But these questions seems to be worrying everyone a lot. I mean, geopolitics itself is a different topic. We can have another day. But
Yeah.
Josh, before we end, we have a small game we can play, I guess. I mean, so there are three questions.
Okay.
Okay. And you can only answer them as legal, non-legal, or gray area. Okay.
Okay.
So you have three answers you can give to every question, each question, which is either it is legal, it is non-legal, or it's a gray area.
Got it.
Okay. So the first question is trading prediction markets on US elections for profit.
Legal.
All right. The second one is utility tokens backed by real world asset incentives, not ownership.
Man, I like to say legal, but I'll say gray area.
Yeah, this was a good one. Even I'm thinking about it. Okay.
Yeah.
The third one is uh, offshore crypto products marketed to US users via influencers.
Gray area.
All
But
right,
it's
all
darker
right.
gray.
So,
It's darker gray than the second one.
so when you say gray area, I'm sure whoever is listening to this podcast, they will be like, okay, let's at least read about it. What is it?
Yeah, I mean, take a good look at it. That's my message. Or give us a call here at the Milbank Law Firm. I'm on the web, and people know how to find me or other great lawyers here. But
So actually, my
really
team actually
appreciate it.
gave me a list of cases that you have actually kind of
Oh yeah.
brought up in the past, and it's a huge list. So what I'm doing, I was actually going to ask you for permission, but I'm sure it's a public data. So, anyways, on this podcast on YouTube, there will be a link where people can go and they can
Uh-huh.
actually get access to the cases you are running right now. They
Oh
can go and
sure.
read about, and we will leave a link for your company as well. And so hence whosoever listens to this, they can actually reach out to you and your peers in US.
That's great. Yeah, there's a lot of cases to link. I think we're up to over 20 now.
After this
For
podcast, expect some really, I would say, people coming to you for RWA advice. We
well,
have a huge
very
audience,
happy to
and,
help anyone I
and
can.
I'm
I
sure
think.
they're going to shoot you with a lot of questions around it.
Well, that's awesome. Well, I'm very grateful and humbled that you reached out. I'm so glad that we could have this conversation. I think you're doing terrific work. And look, anybody who wants to be wise and invest, this is a country where we ought to welcome it. And so I hope we get everything lined up so people can come here and be successful as investors and financial professionals.
Thank you, Josh. Thanks a lot.
No, thank you.